All right, we mentioned that Ford has reported earnings. What we can tell you right now is the shares are rising in after-hours trade because, like its rival General Motors, Ford raised its full-year forecast. Of course, it recently reorganized its businesses as well, so we have a cleaner read on how its old-school cars are doing versus its electric vehicles versus its commercial vehicles. So let's bring in Bloomberg Intelligence senior analyst Kevin Tynan right now. Kevin, I mentioned those three different business lines of Ford. What we learned is that the gas-fueled models, the old-school cars, are really leading the way here for Ford. That allowed it to boost its forecast and also beat analyst estimates for the second quarter. Is that a good thing that Ford is relying on its traditional business rather than the electric cars?
Well, it's the way it has to be, right? The profitability is still in the internal combustion side of the business. And electric vehicles, for where they are in their ramp, are still unprofitable. You know, the benefit of a full-line automaker like Ford or like General Motors is they can sort of sprinkle in the EV launches and production and sales ramp as they need it and not forced to do something unprofitably. So this is still a time in terms of the profit dynamics of the technologies that they are leaning on internal combustion, and they'll do that for a couple more years until you know, those things reach a little bit closer to parity, because they have the ability to do what is profitable, more of what is profitable and less of what is not, still at this stage of the game.
I am curious, though, about the EV side of this, and we know that this is a long-term story, so just that caveat out there here. But when you look at the losses which continue in that EV unit to the tune of $1 billion, when you look at some of the pricing pressures, at least anecdotally, that we've heard about through some of the dealerships here, how much do you think they have to keep spending in this space to get it up to a profitable scale?
There's a ways to go, right? And you're still dealing with, you know, a supply chain and materials costs that are a little bit all over the place right now. You know, so you look at something like Mustang Mach-E, which is transacting right around $60,000. They'll be lucky if that's break even at that high of a price right now. Something like F-150 Lightning is transacting up around $85,000, which there's probably a little bit of margin in there, but it's certainly nowhere as near on a profit contribution dollar basis that the internal combustion F-150 would be, which is selling at $65,000. So those dynamics really have to level out and turn more favorable, you know, and it's a little bit of chicken and egg because you don't want to sell unprofitable things or ramp production on them until it's better, but you don't reach those economies of scale till you do more of it.
What is your confidence that Ford is going to achieve its target of an 8% return on EVs before interest and taxes by the end of 2026? Is this something that the stock price will turn on if Ford makes adjustments to that goal?
Well, look, it's never mattered to Tesla, right, what goals they hit or don't hit. And while it looks aggressive, I would say that I wouldn't see any of the companies backing off aggressive EV goals because there's no benefit to doing it. Right? If you back off the goal, you know, you get dinged for it. If you miss it, nobody notices because, you know, you point to the next goal that's over the next hill.